Hello traders, this is Chris Buss with Traders Profit Compass. In this video, I'm going to do a technical review of the FAAMG stocks, Facebook, Apple, Amazon, Microsoft, and Google after the big week of earnings. Lots of technical developments to go over. I'll be reviewing the daily charts and the 30-minute charts for active traders. So let's get into it. Okay, starting with Facebook on the daily chart, we can see the big gap up out of earnings, creating this gap here below. We've got a rising wedge forming with the potential for a divergent high. And what I mean by that is we've got a higher high in price, but lower momentum and lower RSI. So if the RSI were to roll over and the momentum roll over, then we'd have a confirmed divergent high. So that's just something to be aware of. It's not a reason to sell. It's just kind of like a heads up that there could be a reversal. But in the past, this was a divergent high here. It resulted in a little pullback, but with the earnings, that was more or less negated. So anyways, we've got a gap below. We've got blue sky above. I think for traders on the daily time frame, you can stay long against this gap. And the top of that gap is 249. So anything north of 249 I think is bullish, and you can stay long. But on any pullback below 249, it would favor a gap fill down to this 233 level. So those are the levels to keep on the radar if you're long. Let's move on to the 30-minute chart. And here you can see it really well how the day played out. We opened up here at a high of 256. We immediately came down to this 249 level, and that really wasn't a coincidence because it was the prior high. And you'll often see that, a check back to a prior level. It came back, it bounced, and really spent the rest of the day in a very narrow trading range. So I've got the day's trading range bracketed here in blue from 256 to 249. We've got a big gap below down to 233.50. Now on Monday and in the following days, active traders can key off this trading range. So if we come up here to 256 and break out, that's a definite long against the top of the range, 256. And you can get long and nothing but blue sky above. Now if it hesitates here and gets rejected, it would be an objective place to try and short back to the bottom of the box. So you'd be playing for $7. And then 249 is your support. If it breaks below into the gap, your target is 233.50. Now if you didn't have a position and you were more or less a swing trader, I would still key off these levels. A breakout above 256, if you wanted to get long, you could get long. If we got a gap fill down to 233, that would be a great buy, in my opinion. You could set a stop right here below at 230, and then play back for either the top of the box or for it to go ahead and break out again. So very clearly defined ranges. Keep 256, 249, and 233 on your radar for next week. Up here in the RSI, I've got a trend line here. If you were to get a break below trend, that would be bearish. That would probably coincide with a break here of 249, and you'd be looking for a gap fill. Moving on to Apple, an incredible day. Breaking out here, back testing this prior high. You can see it here, right around, I don't know, it was 402 or something like that, and then just took off. If you're long, stay long. If you're not long, it's kind of hard to chase it here, but with blue sky overhead, it just may keep on going. We've got RSI moving up here to overbought, but as you can see here, on the RSI moving to overbought, you can see it can stay overbought for a long time. So that in and of itself wouldn't be a reason to sell it. And you've also got a momentum bullish cross here. So things look really strong. We've got an uptrend line going forward. You can extend this and stay long against the uptrend line. And if that were to break, you're looking at a check back to the top of the gap here around 402 that you can use as a secondary support level. Moving on to the 60-minute chart. I've got the trading range of the day boxed in here in brown. I've also got a smaller box here in blue that I want to discuss. The open today came up to 411.50. And then as we talked about, it checked back to this prior high right here at 403.30 where it found support. And it spent most of the day consolidating right at this 411 range. Late in the day, about 2 o'clock, we got a breakout here. And there were a couple guys in the trading room that caught that breakout and got long on weekly calls, expiring today. I think they bought 415s. And it ended up at 425, which was an incredible move at the end of the day. Great trade. But that just goes to show you, basic principles of breaking out of a trading range is a place to get long. And that worked out well for him. So anyways, going into Monday and into next week, we've got a well-defined range here between 403 and 425.66. If there's hesitation here and a pullback, it would be objective to try a short back to this 411.50 area where you may see a bounce, or it may go down to check back to the bottom of the box. If there's a lot of weakness and it moves into this gap, you would be playing then for the target of 385, where I would expect there to be a lot of dip buyers back at the, it would have been the Thursday close, back here at 385. I'm not going to say whether that's expected to happen or not. I didn't expect this to happen. I think you got to stay fluid and flexible, in your thinking. We're in blue sky territory. This could go to 500. I have no idea. But if it breaks out from 425.66, if you're an active trader, I think you can be long against that level and just see where price takes you. really strong. If you're long, I'd stay long. No reason to sell at this point as far as I can see. Here on the RSI, I've got a trend line. I would be concerned if this trend line broke. Otherwise, I think it can stay overbought here. Just be cautious if that breaks. Otherwise, I think it looks good. Here's Amazon on the daily. A couple things I want to point out. We've had a nice uptrend channel going. Then it broke out and ran to 32.50 and spent quite a bit of time consolidating in this $350 range between $2,900 and $3,250. Now, today we had the gap up, and notice where it stopped, right at $3,250. I've got the range boxed in, and if price continues to be weak, I see it coming down to either hit this trend line and bounce or to go ahead and fill the gap. But really, for the longs to watch, it's $3,250. As we've been discussing in our group and in the videos, whenever you have a trading range and then you break out of that trading range, the measured move is the width of the range. So in this case, the width of that range was 11.7% or $350. If we get a breakout here at $3,250 and we can come up and knock out this $3,360 level on the all-time high tick, I see this going to 3,600, 3,650, something like that. 350 added on to 250 gives us a 3,600 measured move target. So going forward, keep on the radar this 3,250 level. And if it breaks above, I think it's a place to get long and look for a $350 move. I think that has a good chance of playing out. There may be some weakness next week to fill this gap, but otherwise, I think it looks strong. If price were to break this gap to the downside, it basically extends this trading range and brings price back to 2,900 in the lower trend line of the channel, and I think you'd find a lot of dip buyers there. So if you're not in and you see that weakness and you don't want to play to the downside, I would be having your target set to make a dip buy at 2,900 at the bottom of the trading range and against this rising channel line. Moving on to the 60-minute chart. I really like how this sets up. You can see it gapped up here to a high of 247. Immediately came down and then consolidated beneath this 3,200 level, halfway between the trading range. So you've got some clearly defined levels here to shoot against if you're an active trader. 3151 is the bottom of the trading range. It would be objective to try a long there. against 3151 and look for a bounce to 3200 and then to 3247. And if you get a breakout, just like we talked about, the next target would be 3335, and then the next target after that would be that measured move target up around 3600. On the downside, if this 3151 breaks, you're looking at $100 a downside to fill the rest of this gap. So plenty to shoot for there. If it overshoots, there's this support level down here around 29.75. So levels are very clearly defined. Be long or short against them, as you wish. How the price movement dictates, but you've got all the lines here very clear to trade against. Moving on to Google, this was the one that was soggy today. It was down 3.25%. You can see the gap here that I've got in purple. To me, on the daily chart, you just got to take out the gap here, the top of the gap, and that would be a place to get long. As long as it stays below, I think your downside risk right here is like 1475. You can see price came down to tag the 50 EMA in this trend line where it bounced. So I think you can be either long against the trend line or wait for a breakout. Any break of this trend line and brown, I think you're coming back here to 1425 for starters. And if that breaks, then there's a lot more downside. So anyways, let's look at the 60-minute chart where it's a lot clearer. So we had the gap down from 1538 down to 1505. The selling persisted. We had a little momentum overshoot here from 1465 where it found the low at 1454 and then bounced up to this pivot point at 1490. So going forward on Monday, if you're trying to play to the long side, I would either be buying the entry into the gap at 1505, looking for 1538, or wait and see if price pulls back to this 1465 or 1454 level. Those are your buying levels if it back tests this low. If you're bearishly inclined, if it makes a push up to the gap and fails, that's a place to get short. Certainly a place to get short here below 1490, and then you're playing for 1465 and then 1454. And I wanted to point out, this was a prior trading range of $70 down to $13.90. If price breaks this low of today at 1454, great chance that price comes down to $13.90. Whenever you break out of a trading range and then come back into it, it's normally a bearish move, and then price goes on to retest the bottom of the trading range. So if there is weakness next week, and if you don't enter up here, I would have 1454 alarmed for a try at 1390. I think that's very objective, very reasonable. and would be a good short attempt on Google. Microsoft has also been really interesting lately. We saw that weakness coming out of its recent earnings release. Came down, broke its rising trend line, and really has been wrestling here for about a week at 202.50. And today, we had initial weakness in the stock, and it came down. Didn't quite make it, but it made a run at tagging its 50 EMA here in green. Got a big bounce, and then bounced up above this 202.50 pivot area. So, and in doing that, it recaptured the 8 EMA and the 20 EMA. So that in and of itself is a really bullish move. If it were to proceed higher, I think it could come up and back test this rising trend line, and I think the bulls would be in charge if they recaptured it and recaptured this breakdown candle high right around 212.50. And I think it'll be clear when we look at the 60-minute chart in a minute. But just to finish this up on the daily, if it breaks 202.50, I think it's coming down to test this 50 again around the 197.50, 196.50 area. If it breaks that, it's coming back down to retest the original breakout at 190, and I think there'll be an absolute army of dip buyers at 190. So if you're not in, and you're not inclined to, I'm not going to say chase it here, but you're waiting for a dip buy, I think you'll have a lot of company here at 190, and I would certainly be a buyer there, and I think a lot of other people will too. And then you just set your stop just below, and hey, if it loses 190, I don't know what to tell you. We'll be in for a world of hurt, because that would make all this up here look like a false breakout. We'd be back below the original breakout. First stop would be, down here at the 200 around 172. So anyways, that's way in the future. Bullish day here. We'll see if it can hold that 202.50 line and see if it can make a push to back test the uptrend line. If we go and look at the 60-minute chart, really interesting chart. As we were just discussing the trading ranges, we had broken down below this 204 level a week or 10 days ago. Found support here at 200. We had a test. It held. We had another test. It held. We had another test. It held. We had back tests of this 204 line, which served as resistance all along in here. Today, we got the big drop, and we came down to this 200 level. We took a peek below and then popped above. If you were actively trading this, and you got this move today down to 200, and you were short, that should have been a place where you were flipping from bearish to bullish just because of this prior price action. And then you were set up great for a run at the top of the box, which you got. So You could have made 3 or 4 on the downside and 3 or 4 on the upside. And then this breakout, I think, is really important. What we said before, when you break out of a prior trading range, the measured move, it's the width of that range. So the width of this is $4. We broke out above 204. So in my mind, the near-term target on a measured move basis is 208. We do have the downtrend line that comes in around 207.50 that may pose resistance. But I think as it stands now, you can be long against 204. Looking for a move to 208. We said on the daily chart that this 212 level corresponds to a back test of that rising uptrend line on the daily chart. And if it can break above, then you're looking at a run at 215. So this is real constructive basing pattern, and with the breakout, I think it looks really constructive for a move or a run to 208. Set your stop just below, and hey, if it comes back and takes you out, get short, because you're going back to 200 again. And it's been working for a while, so keep doing it. Okay, that wraps up the FAANGs. Really big week. For the most part, they look really strong. The only one that there are some questions about are Google. The trading levels couldn't be more well defined. If you're an active trader, just follow that game plan of the prior trading range and the gaps. And I think it'll be a really interesting week next week to see how these trade after the strong week they've had this week. I hope you found the analysis helpful. In the show notes, there's links to the blog and to register for all my content. Registration is free. It only takes 30 seconds, and then you'll get all my content at least 6 times a week. I publish a morning note every day in the pre-market that's been really helpful to the traders that use the notes every day to set up their game plan. And also on the blog, where there's a ton of extra content that most people find helpful. Again, this has been Chris Buss with Traders Profit Compass. I hope you have a nice weekend.